Good morning, everyone. It's Dan Bossi at Ag Resource Company. Ben is over in Europe, so we kind of switched places this week. I'm back and he's there. So happy Memorial Day, everyone. I hope you have a very safe and restful 3-day weekend coming up here. We have Chicago markets that are down today. A lot of the weakness is related to what's going on with President Trump and his tweet this morning, which we'll talk about in a little depth about putting a 50% tariff on EU goods coming into the United States after the 1st of June. This would be rather dramatic for the EU. And so this has got the attention of the markets, and it's probably the biggest feature. There's some weather ideas going around also about additionality for rain coming across the Midwest and how good the start is. And let's remember on Tuesday, we do get the first crop condition ratings of the year. This would be for corn and spring wheat. We're looking for ratings to be about 75% good to excellent, or within a few points of that. So it's going to be a very highly rated crop as we go forward. Let's hop right into it here and talk a little bit of what's going on. Trump tweeted out this morning that, of course, he is not happy with where we are with the EU. He talks about a massive deficit of $250 billion a year. And with that, of course, he's threatening to put tariffs on June 1st of 50%, 50. That's a big tariff jump for the EU, going from 10 to 50, and would affect a lot of agricultural products. Now, importantly, we would imagine the EU will threaten or retaliate with some speed coming forward. They've been looking at items to retaliate against the United States. On top of that list would be corn, soybeans, and then, of course, some livestock products. On the other side of it, of course, if there's tariffs on things coming into the U.S., butter, we get a lot of Irish butter coming in. Of course, that would have a higher tariff on it, ultimately would be felt at the grocery stores rather quickly. But negativity is what's being felt in the corn and soybean market here this morning because of this 50% tariff talk that's coming from Trump. Now, again, June 1st is right around the corner. It's going to be difficult for the U.S. and EU to come to any kind of terms. We'll see what happens over the long holiday weekend, but this is on the minds of traders as they're selling out of long positions here this morning. The other thing to talk about a little bit is we are looking for a relatively strong U.S. corn export inspections on Tuesday. Of course, the markets are closed on Monday for the U.S. Memorial Day holiday. But as we look at it, we're looking for around 60 to 64 million bushels of U.S. corn to leave last week. That's based on our vessel count. So, however, notice that vessel numbers are declining. So we may see another week or two of good U.S. corn exports, and then we'll see the numbers starting to tail off as that ship lineup is indicating us that maybe we won't have the same kind of pace that we had in the last couple of weeks going forward. The other thing we should talk a little bit about here is a report from CoBank. CoBank is a large organization that finances much of agriculture, in particular the elevator chain. So they get a lot of this data from their clients, if you will. And they're telling us that outstanding new crop corn and soybean sales are at or very close to some 5-year lows, particularly in soybeans, which are down, they're saying 88%. Now, corn being down a little less than 29%. Wheat sales are actually up from a year ago. But when you look at this holistically, the trade issues with the United States has not allowed the U.S. farmer to make as much or as many new crop sales as he would like as of May 1st. And I don't think that's changed a lot in the last couple of weeks. Farmers are telling us that they're still hoping on higher prices, whether it be through drought or trade, and looking to reward that rally. Whether or not that happens, we'll find out. But as Trump here goes against the EU, there may be some changing in this mindset as we go forward. And it does create some issues longer term in terms of if there is a rally, we would imagine the U.S. farmer will be stepping into it with some additional sales as we go down the line. Also, as we look forward, we're looking at weather forecasts that have enough moisture for early crop needs. We're going to be saturated across the south central United States. That includes much of the wheat belt, the hard red winter wheat belt. Then, of course, stretching from, let's say, Kansas down through maybe our friends in southern Missouri, Tennessee, Kentucky. They're going to see abundance of rain. The points we're watching very carefully. Today, we're quickly planting seed throughout the Canadian prairies. Saskatchewan is now about 77% done, but it's getting dry up there. So there's enough need as moisture for seed germination, but we do have to very carefully and closely watch what's going on in the Canadian prairies in that first half of June. This is an area that I would highlight as a potential hot spot. The other good news for U.S. crops is that, and we're looking at this, is of course that the Midwest is going to be relatively cool. We've been mentioning this in the last couple of days. No real excessive heat unless you're looking north into Canada, up by the Arctic regions. So again, this very cool and dry structure should favor U.S. crops, and we think we're off to a very good start here in the central U.S. Lastly, we do have option expiration today against July contracts to May. Those will go off the board at the close today. But if we're looking at the money volatility for corn, soybeans, and wheat, it has been coming down. And so if you're looking at trading in these markets, options provide a better venue than trading a future. So be aware of that. Option vol rates are low. It tells you at the moment the market's not seeing any real threats in terms of weather or in terms of abnormalities other than what's going on with trade out of Washington. But these vol levels say that if you're going to be looking at long or short positions, maybe it's the best to position in options going forward. With that, I just want to say I hope everybody has a very safe holiday weekend here in the United States. We do have, of course, some active trade coming up. We do think there's still going to be lots of volatility. You're always welcome to take a trial of Ag Resource for $1. But within this video cast, we like to at least highlight the opportunities as we see it. We had a rally that we expected from after the May crop report. We now believe that as we go into the Memorial Day holiday or shortly thereafter, we are starting to see some highs. So unless we get a weather problem creeping up during the month of June or July, markets tend to retreat as the farmer becomes more aggressive and we have more certainty around the upcoming new crop. Happy Memorial Day, everybody. We'll be back, and Dan Bossi wishing you a very good weekend.